How do you do, ladies and gentlemen? I'm your host, Seth Julian, and welcome you to today's morning briefing. We are looking at a map of the earthquake that took place approximately 24 hours ago in Turkey. It's on the Syro-African Rift, one of the most active earthquake zones on the planet. The first one struck at Gaziantep yesterday, very early in the morning, and the second followed about 8 hours later in the late morning. These were 7.5 magnitude quakes. For those of you who are unfamiliar, this scale is a logarithmic scale. It's not a linear scale, so 7.5 isn't twice as powerful as a 3.5. It's 100 times more powerful. So a tremendous amount of force. Damage is extensive. The death toll is already at 4,800. 24 hours in, it's probably going to go to 20,000. The effect of that could possibly be felt in this. This is the dollar-lira exchange rate. This is from the moment the earthquake occurs. We expect it rises exactly 0.2%. Now that may not seem much in general, but when you look at the history of the lira for the last few months, you see that's really quite a stride in a short period of time. We expect it to weaken as the dust settles on this disaster, spending starts to pick up, and an attempt by the current sultan to further ease borrowing and encourage his electorate or his electorate support with cheaper, more worthless cash. So that's what we expect to happen. We expect this rate to continue. The other thing we want to talk about is something we've been in the news now for about 2 weeks. We entered a gold position about in 1872, right about here, after it broke the 50% retracement, the Fibonacci retracement line. This graph, though busy looking, contains a great deal of data, and I want to just break it down a little bit. This line is obviously, the candlesticks is the price of gold in US dollars, overlaid with the Fibonacci retracement, and here you can see the price at the different ratios. The purple line is, the blue line is the US dollar index, and the purple line is Bitcoin in dollars. The purpose of this complicated graphically complicated presentation is to show you the inverse correlation between the strength of the dollar and the relative price of gold and Bitcoin denominated in dollars. As the dollar strengthens, these two weaken. It's called an inverse correlation. It means when one goes up, the other goes down. And the degree to that correlation is remarkably strong. It's approximately 0.48. That's about 0.5. So it shows you that it's my mistake. It's about 0.9 off about 0.5, 0.8. And that minus indicates that it's a negative correlation. When one goes up, the other goes down. So that's what we're looking at here, is the dollar begins to return from this decline that's taken place pretty much since the inflation really started to kick in mid to late 2022. The dollar has weakened. It's on the way back as interest rates continue to rise, and the robust economy in the United States drives up demand for the dollar. So gold, while we're still holding on to those positions we got in at about 1869, or so, 1872 rather, it's broken below again the 61% retracement, but on lower volume. And so we think it's going to re-attempt to penetrate the 78 retracement level. It tried once and failed. We don't know. I don't know if it's going to be directly related to the dollar strength. The gold has been somewhat erratic in that respect, as too has been Bitcoin. But at this moment in time, this is the precise correlation. So that's going to do it for now, ladies and gentlemen. We're long dollar lira, and we're long gold at the moment. So I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Khalas for now.